If you want to start investing in ETFs, but you don't know which ETF to buy first, this is the video for you. Let's go. So guys, welcome back to Inside Investing, and today during this video we're going to be showing you which ETF you should buy first as a starting ETF investor, and that's going to be the VWRL, as you can see right on the screen right now. So this is one of the most important ETFs, one of our key staples in our ETF portfolio. As you know, we build up our ETF portfolio at DEGIRO. If you've watched our previous videos, we do give periodic portfolio updates during which we show you how much ETFs we have in our portfolio and how the portfolio has grown, what our returns has been so far. So if you want to see that, then of course have a look at our channel, subscribe if you haven't done so already, by the way. And also if you like this video so far, give it a thumbs up. And in today's video, we're going to show you a couple of important facts about VWRL, on why we like this ETF so much. The information on screen is from the Vanguard website itself, so that's why of course we know that it's the true value and it's accurate information. So you can also look up the information yourself on the Vanguard website. And to start off with the first important fact that we like about VWRL, the number of stocks included in this ETF. As of the 31st of January this year, there are 3,733 stocks included, meaning that there's more than 3,500 different companies included in one ETF share. So if you buy one ETF of 87 pounds, so I think it's going to be a little bit less than 100 euros. For less than 100 euros, you're buying a very small piece of more than 3,500 companies, which is one of the things why we really like this as a staple of your portfolio. You don't want to start off with buying a specific ETF of, let's say, real estate or clean energy or cybersecurity or whatever. No, we think the most important starting point is going to be a global all-world ETF, such as VWRL. As you know, we are long-term investors, so we don't really care too much about the short-term profits that it's making. We really want to have a look at the portfolio data, because in here we can really see a few key statistics that we want to find out on VWRL. The second most important part is the region exposure. And if we look here, we see that it's about 61% North America, which we really like, because that's why we also really love buying S&P 500. The performance in the North America, I think, is pretty clear over the last decade. So that's why we really like to see that it's quite a heavy exposure for the Northern America. Also Europe with around 17%, the Pacific 11%, and also a little bit of emerging markets. This is one of the things that we really like about this ETF as well, guys. So some people really love to invest specifically in emerging markets, but what we like about this ETF is that we already have coverage there. So we already have 10.5% coverage of the emerging markets, so we don't really need to buy anything specific, because if we buy this ETF, we also buy in and we also chip in that emerging markets. The next details that we want to look at, market allocation, we see that the US close to 60%, then Japan as well 6.3%, the UK 4.1%, China 3.9%, France 2.9%, and then Canada 2.7%. And then down here there's a lot of other smaller markets, of course, that are included as well. Germany, Taiwan, India, Netherlands, Italy. But those are the biggest ones, right? It's a lot of the US, you can see it close to 60%. So that's from our perspective at least very good, because we do really see a stable performance there as well. So that's of course why we want to see this number a little bit higher in the US, which we can see here. But then this is very important, guys, which sectors are actually included in VWRL. And we can see here a little bit of technology, close to 20%. So that's great from our perspective. We love the technology sector as well. Tesla, Apple, Microsoft, Google. Financial companies, you would say, are also included at around 15%. Industrials, 13%. Consumer 13% as well, healthcare, and then a couple smaller sectors as well. If you, by the way, love this video so far, then please give it a thumbs up and subscribe if you haven't done so already. And then let's go to the last details that we really think are very important. Those are the holding details. So these are all of the companies that are actually included, as you see. We're not going to look at all of them right now, but we're only going to look at the largest. And that's great to see that we're actually having Apple on top of the list at 3.5%, Microsoft as well 3%, Amazon at at close to 1.5%. And then Alphabet twice for, let's say, a little bit less than 1%, so 2%, let's say in total. ExxonMobil, Nvidia, United Health Group Inc., and Tesla Inc. is on top of the list as well. It's great to see these big companies on top of the list, and I think it's great as well. That's why we really prefer ETF investing. We don't need to put all of our eggs in the same basket, being investing everything into Apple. No, we're buying into more than 3,500 different companies. So overall, our rate of return should be more stable, and also the risk is significantly lower in comparison with buying just the shares of one company. So those are the most important details that we want to share with you on the VWRL ETF. If you have any other questions on this specific ETF or on other ETFs, then of course leave them down at the comments below this video. Also, if you haven't done so already, please give this video a thumbs up and subscribe. We'll see you in the next one, guys. Let's go.